G'day legends and welcome back to another video. In today's video we are doing a comprehensive macro and short-term analysis as well as discussing what I believe to be the most important level on Bitcoin's chart that not many people are paying attention to. This of course is the 2-week downtrend on the RSI. We are going to be discussing what this level means and how you can utilize it in not only projecting what is likely to come next, but acting as invalidations and validations of a new all-time high and a correction into a steeper downtrend. We'll also be taking a look at the weekly charts in extensive detail, going over all my expectations and my current stance, as well as discussing the short-term price action as Bitcoin has rallied and rejected into that $116,000 level. Will we see the buyers defend the 114K support? If we break down what does this mean and what probabilities are there for continuations higher or even steeper pullbacks. We'll be covering absolutely everything in the video today. We'll also be taking a look at Bitcoin dominance, the 4-year cycle, the total cryptocurrency market cap, and the altcoin market. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in joining our VIP community, you can do that by clicking the pinned comment of the free channel for more information. Let's go ahead, guys, and jump into our analysis. So we have a bunch to take a look at today, discussing the weekly chart from a macro perspective. Are we entering a bear market? When does the bear market start based on historical data? What happens between the bullish trigger point, which is going to be a variety of indicators and horizontal levels, which we'll discuss in today's video, which need to break for us to go into new all-time highs, and those bear market trigger points? How is the price action developing between those levels, and how should we tackle the market moving forward? We'll also be discussing, of course, all the short-term levels and our direct expectations for them, our invalidations, our trigger points, potential setups, and of course also discussing the upcoming interest rate data, which is in just under 2 days. Let's start on the market data, 24-hour volume and liquidations. Jumping right into it, we can see here, guys, volume and liquidations. We had a bit of a surge yesterday coming out of the weekend. We had a push up into that 116K level. So we saw a bit of volume push into the market. This is up 32%, 301 billion. Liquidations down about 18%, so not down a massive amount, 327 million. We're still seeing very even splits between longs and short liquidations, 184 million long, 143 million short, telling us already that although the price has been pushing upwards, it's been doing it in more of a choppy manner. People are uncertain, people are polarized, and I think ever since we saw that 6th of October top and we saw that large correction, half of the people are expecting steeper corrections, half of the people are expecting continuations, and I think this polarized environment is pretty normal anytime we enter or approach major pivot points in the market. So anytime we come to a point where the market could potentially break critical support downward or upward, we have this polarizing effect where the market is very undecided and everyone is very, I guess, polarized in their opinions, and with that we see, chop in the price action, which we are seeing. We see even liquidations for both longs and shorts. Moving over to the S&P 500, pushing upwards into rate data. Now this is fantastic to see. The S&P 500 has been on an absolute rampage. It's been absorbing pretty much every bit of selling, every breakdown we're absorbing. We're still watching that 50 EMA, guys. If we break that 50 EMA, that is going to be the sign of some corrections back into support. We're watching that 200 as a retest. That'll be worst case scenario. Until then, like we said, we break over 6,900, our target of 7,000. We're about 50% of the way now to our target, just pushing over 6,914. So watching 7,000 as a potential target. Keep your eyes peeled on that. The DXY, not too much happening. We are seeing a little bit of a daily drop over here, a red candle on the daily, on the weekly over here. But again, we're not expecting too much to happen until we have that interest rate data. Interest rate data is coming out in just under 2 days. We do have around a 98% probability of an interest rate cut, and it's going to be a 25 basis point reduction. As we know, interest rate reductions are inherently bullish for the risk asset market on the macro scale, as lowering interest rates decreases the cost of debt. It also decreases loan obligations, so debt to service ratios, which facilitates more available household cash flow or cheaper acquisition of debt, which facilitates, again, this positive cycle of where money can be leveraged into assets as the dollar declines in value and debt becomes a lot cheaper to acquire. So we see this situation where the markets generally grow. Now, in terms of the market itself front runs everything, right? It front runs. It moves based on perceived systematic risk, not actual market risk. It is perceived systematic risk. And if we take a look at the market for Bitcoin, ever since we even started talking about potential interest rate reductions, that was back over here in November 2023, the market has rallied massively, even though I think we've only had about 3 interest rate reductions this entire time. So it is not always the reduction that is required for the market to move. It is just the anticipation that there will be reductions is enough for the market to move. So we are paying close attention to that. I think the only thing I do have to say about this is if we do see an interest rate pause, the market is going to drop very aggressively. If we do see the Federal Reserve press conference allude to the fact there will be no more interest rate drops, we will also see the market drop, because remember, it is the perception of future risk that drives the market. The market adjusts now for what it expects in a future period. So you have to kind of think a few steps ahead when we're looking about how the risk asset market adapts to what is expected from an economic perspective. Let's go ahead, guys, and wrap that up. Let's jump into our analysis today. Like I said, a lot to take a look at. Before we jump into all of it, go ahead and sign up to BitGet, BitUnix, and BingX. Exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making this content, and you'll support yourself trading on exchanges I use and I trust. And you'll get access to our bonus monthly campaigns. We gave away over 55,000 US dollars last month. We have $60,000 up for grabs this month. You can go ahead and find out more information in the Telegram channel pinned comment. Let's get into it, guys. We'll see you back in a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get into it now. I want to summarize absolutely everything over the last few weeks because it has been a busy few weeks in the market. We had the 6th of October top. We saw a 22% correction. Since then, Bitcoin has been chopping more or less sideways, but we are still sitting underneath that major point of resistance of which we need to break above to tell us that the buyers are back in control. On the higher time frame, that level is 116,000. With all this happening, we've got some bearish signs triggering. We have, of course, the downtrend in the 2-week RSI. We, of course, have got the breakdown of the bull market support band, but we've also seen the loss of the macro symmetrical triangle on the weekly for the RSI. But we also got some good things. We are sitting above that horizontal low at 45 on the RSI, which has been the bull market support, we are sitting above the Gaussian channel upper band, and we are sitting above the 50 EMA. So although we are seeing some weakness develop, and this is what it is, we are seeing weakness develop up over here, the proper high time frame bearish trigger points where the market turns macro bearish have not yet been activated. Now on top of that, we have seen bearish validation for potential tops, and that is exactly why we are in this polarizing point where everyone seems to be disagreeing with everything. Some people are bullish, some people are bearish. It's because we are at a deciding point for the market. Anytime we come to a deciding point, a decision moment, there is always going to be polarity in people's opinions, because that is just how it is, right? Everyone believes different things. Now, when we're looking at my expectations, as you know, guys, I turned neutral to bearish on the macro scale for the first time since 16.5k. I was bullish down over here. I was bearish at 64k. You can go and check it out. It's all on the videos. 64k, I turned bearish. I turned bullish again at 16.5k. We've been bullish this entire time. We've had periods of short-term bearishness where we expected corrections, such as the correction over here, negative, 26%, such as the correction over here. This is about a negative 22%, but this is the first time where I'm actually higher time frame bearish, but that doesn't necessarily mean the bear market has started. As we've said already, the bear market will start when we lose the 50 EMA and Gaussian channel upper band. Only upon the loss of those two levels can we be confident that bear market will start, because if we look at the historical price action, we're going to show you the 4-year cycle now, the historical price action, if we look at when the bear market started in prior cycles, it was upon the loss of that weekly 50 EMA and Gaussian channel upper band. We'll circle it over here. That is when the bear market started. Over here, that is when the bear market started. Over here, that is when the bear market started. So again, based on that pattern, if we lose the 50 EMA and Gaussian channel, it would be safe to assume from a technical perspective, we have enough high time frame weakness to suggest a steeper correction. That is my current stance, guys. So let's jump into all of this now from a macro perspective and then break it down to the short term. Let's start on the 2-week. At the start of the video, I said this was probably the most important level at the moment, and I do believe that, but I believe it's the most important level in reference to what the buyers will need to do to flip the trend back upwards. Now, when we're looking at the trend of the price action, the price has been moving upwards now since around, well, all the way back since 2023. But if we look at this 2024 top, March 2024 top for the RSI was back over here. And since then, every single peak in the price action, we have been creating these lower highs. So we know that the price is moving up on the macro scale, but we've got downtrending RSI in the 2-week. We have downtrending momentum. So this does mean eventually this trend will exhaust and we will see mean reversion into that 50 EMA at the least. When that happens is hard to pinpoint. We'll be discussing when we think that will happen when we go down to the weekly chart. But when we're looking at what needs to happen for the buyers to invalidate and continue back upwards, we need to see this exhaustion absorbed. And the best way to suggest the absorption has been absorbed, the exhaustion has been absorbed, is for the RSI to simply break this trend line. This would be a positive momentum shift, and by doing so, we would then expect the price to push one more leg up into another higher high, a new all-time high for Bitcoin. That is what we need to see from a 2-week perspective for us to be confident the market is moving into a new all-time high. Until that happens, this is going to be an expected top, and the risk of pullbacks are very much real until we see that positive momentum shift. Let's go ahead, guys, and that is why I believe that's the most important level, because for the buyers to break through here, it would signify a dramatic shift in momentum, which could definitely facilitate moves to new all-time highs. Let's talk about the weekly chart now. In terms of the weekly chart, for the next leg down to start, right? For the next leg down, we're looking at the leg down, we're talking about a higher time frame move. For that to begin, we need to see 3 things, and these things we've been discussing this entire time. Number 1, the loss of the Gaussian channel upper band and 50 EMA. That is number 1 and 2. And number 3, the loss of the 45 point in the RSI. We discussed momentarily how the 50 EMA and Gaussian channel have historically triggered bear markets. We showed you that just minutes ago. that is going to be the same factor. The loss of this level, we would likely see a correction to the lower band or the 200 moving average. But when we're looking at the RSI could allude to us whether or not we will bounce from the 50 EMA and Gaussian channel like we have done in the past, or whether or not we'll actually see that breakdown. If we take a look at the prior instances where Bitcoin has bounced from the Gaussian channel and 50 EMA in this bull run, has to be contextual. So in this bull run, we can look at instance 1, we can look at instance 2, we can look at instance 3. Now, what was the similar factor among every single one of these instances? Well, the factor was the RSI held. Established a low, it held and confirmed. It held and confirmed. If we see that breakdown, it is highly likely this level of support we just talked about, the Gaussian channel and 50 MA, will not hold and we will see the breakdown. By doing so, it is very likely that will trigger a high time frame correction into 88, into 70,000, etc., etc. Essentially, the bear market begins, and by doing so, that confirms this as the macro top. Okay? I don't think I can explain that any more simply. Those are the trigger points, those are the invalidations. Remember, it is not about being a bull or a bear. The market doesn't care about bull or bear. That is people. People care about categorizing themselves as team bull or team bear. You need to detach yourself from that mindset. It does nothing but cloud your judgment and put you in a box where you ignore 50% of the market's opportunities. The market is what it is. You do not have to categorize yourself for a bull or the bear. The market is moving up, the market is moving down. You can capitalize on no matter what happens if you remain objective and unbiased to a specific direction. These are the trigger points we are watching. When these trigger points activate, we expect the market to move in those particular directions. To summarize it one more time, for macro downward moves, we need the 50 EMA and Gaussian channel and the RSI. For macro upward moves, we need the 2-week RSI to break. Let's jump over to the short term. So the short term price action is very interesting. We've seen an absolute mess, and I will say October has been probably the most crazy month in terms of Bitcoin and cryptocurrency for a very long time. The amount of insider trading, manipulation, flip-flopping in the news for tariffs, the largest singular crash in cryptocurrency history. October has been absolutely crazy. It's been wild. It's been absolutely wild. So a lot of people got wrecked in October. I would say if you even managed to come out unscathed this month, you've done a fantastic job. If you profited, you've done an amazing job. If you got wrecked, well, a lot of people got wrecked with this move. Again, that's just how it is sometimes. It was very unfortunate what happened. Thankfully, we were out. We expected that top on the 6th of October. We were shorting over here. We actually took our short profits over here. We didn't expect that larger move to occur, but then we shorted here again. We shorted here again. We've been trying to short over here. We're watching to see what happens. But let's just take a look at Bitcoin. What we can see for Bitcoin is 116, a very important level. If we break 116, we likely move into 120. Of course, that increases the probability for that 2-week RSI breakout to occur. Furthermore, what we can see is when we break through this 118k level, we move into a new high. We saw that here. The 118 break into a new all-time. If we look at a daily chart, we can see already the 118 level is a very important level, and for us to even get there, 116 needs to break. So we're watching very closely here. We think the bias will shift in favor of the buyers for the first time if we break back above here. In terms of the short-term trend, the short-term trend has been upward trending. As we mentioned in our prior video, for us to begin that next leg down into those weekly levels, we need to lose 107. This is a point of support we discussed back on the 23rd of October. We were talking about how this was a level of support. If we drop back below here, expect corrections 103, 102, and then into 98, 200,000. But of course, as we've been seeing, the price action has been pushing up. We've had this positive momentum. What we are watching is, number one, we are watching this 4-hour uptrend in the RSI. If the RSI breaks down, expect corrections back to these lows, okay? Number two, we are watching the 114k level. Prior resistance becomes future support. So we're watching the reaction of the price action here. This is where Bitcoin will need to bounce to confirm that this trend has the strength to maintain. If we bounce here, we can push higher. If we drop below 114, expect corrections at least least to the break of structure 112, 111, and worst case scenario if the RSI breaks down 107, 108. Okay, if we're looking at the momentum here on the 4-hour chart, we have just had a weakening positive momentum signal print for the first time from these lows. So again, with that, we could potentially see that momentum begin to spill over, which would suggest, again, a correction is incoming. So, the short-term price action, and I annotated it in one of our prior videos to put very simply. Below 107, this is bearish. Above 116, this is bullish. Between, it is bearish to neutral. The only reason why it's bearish to neutral and not straight neutral is because the trend is still downward facing, okay? When we're looking at new all-time high levels, we're looking at above 120. When we're looking at bear market risk, we're looking below 98,000. So you want to categorize kind of where we are, and I'll go ahead and make this even more simple in a second. If I go ahead and get some boxes out over here, just zoom out and delete this for a second, get in some rectangles, this would be like your danger zone. Let's just make this red, right? This would be your neutral zone over here. Let's just make this gray because it kind of matches the current color. This would be your all-time high zone, right? This would be your exceptionally bullish zone. And then between here, you are kind of transitioning into those phases. So this is a transition zone. This is the transition zone into that exceptionally bullish part and that exceptionally bearish part, okay? That is kind of how we're looking at the market over here. Again, with the trigger points acting at 116.18 and 107 for those moves into those transitions, into those major directional macro shifts. That is it, guys. We actually ran out of time to talk about the total cryptocurrency markup. I don't think there's too much to discuss at the moment. We'll come back and discuss this after interest rates or in our next video. With that being said, have a fantastic rest of your day, and I'll catch you guys all in our next video on Thursday. See you then. Bye.